Good morning, everyone. Welcome to the Foreign Correspondents Club of Japan, whether you're here in person or online via Zoom. I'm Anthony Rowley. I'm a former president of this club, and I shall be acting as moderator today. This is the latest of what we call our deep dive events, where we aim to take an in-depth look at various subjects of common interest, current interest. And this morning, the focus is again going to be on the so-called digital money revolution. But whereas last time, that was 2 weeks ago, we looked at this from a global perspective, today we're going to be focusing specifically on developments here in Japan. And again, we have 3 expert panelists, and allow me to introduce them right away in alphabetical order, which is the order in which they'll also be speaking. So on my right here, we have Tetsuya Inoue-san, who is researcher in the Financial and Market and Innovation Research Department. Sorry, he's chief researcher in the Financial Market and Innovation Research Department at Nomura Research Institute. He formerly served in the International Department of the Bank of Japan, and was also a member of the staff member of the policy board there for a number of years. And then joining us online, we have Peter Morgan, who's head of research at the Asian Development Bank Institute, or ADBI, here in Tokyo. Peter was formerly chief Asia economist at HSBC in Hong Kong, and also worked for several leading international financial institutions. And on my left, we have Gavin Raftery, who's a partner in the Banking and Finance group at the legal group of Baker McKenzie. He's also a member of the firm's Tokyo Office Management Committee, and additionally is one of the heads of Baker McKenzie's Global Finance Initiative. Okay, well, at the end of the presentations, we'll take questions from the floor and also from our virtual audience online. Please remember, by the way, that these deep dive events, questions are welcome from all FCCJ members, guests, and from registered visitors, not just from foreign correspondents or journalists. Okay, I'm now going to turn to our speakers and ask them to walk us through what is rapidly becoming, I think, a thicket of technical terms in the digital money wood. I suppose one question that's on the minds of many of us here is if and when we're going to see a digital yen to join the growing ranks of other central bank digital currencies, or CBDCs, and what it's going to mean for us in our personal, our financial and business lives. Okay, well, let me not get in the way of the experts. Inoue-san, perhaps you could give us your presentation, but let me first again remind the speakers to adhere to the 15-minute speaking time. I will give you a nudge 3 minutes before you reach the end of your time. So Inoue-san, please.
So first of all, I would like to thank Ronnie-san to give me the opportunity to discuss this interesting topic. And I understand that the previous session several weeks ago discussed that the significance itself of this central bank digital currency or something like that. So I would like to discuss today the implication of potential implication of this central bank digital currency to the financial businesses or financial services in general in Japan. So first of all, let me start with the presentation. Please look at the slides. First of all, I would like to clarify the potential, prospective relationships between this central bank digital currency and the private sector financial services. You know that in light of the literature of the central bank digital currency, that most of the central banks assume that the CBDC only function as an instrument for payments and settlements, so that any value-added services could still be provided by the private sector people. In addition, that household and firms continue to hold financial assets as instruments for store value or their fund management because of the margin of the yields. In other words, the central bank like to reduce the yields to central bank digital currency to differentiate the central bank digital currency and the rest of the broad range of financial assets. And certainly that the private sector players continue to play the role of financial intermediation because of the central bank do not have the expertise or mandates to allocate the economic resources. So that this fundamental role, it should be done by the private sector people. So that if you look at the charts on the left-hand side, that in the interest of time that I skipped the detailed explanation, but still that I'd like to mention why that even if after the introduction of the CBDC, people could use the credit cards or the QR codes in order to make payments or settlements. But the instrument, they have the options to choose the instruments for settlements, either the bank deposit or the CBDC, depending on your preference or something like that. So this is the basic relationships or potential basic relationships between the CBDC and the private sector instruments for payments. So let me turn to the next slide. And I guess that most of the audience is from the overseas or the domicile, either domiciled in overseas or in Japan, but still that you might have the impression that in light of the international evolution, the BOJ has been too cautious or skeptic about the idea of the CBDC, so that in the end, the BOJ made an announcement of their own approach of CBDC in October last year. So that some people like to mention that, like to criticize it. It is too late or something like that. But in light of in the context of Japanese, the situation, I think it was, that timing was rather optimal. In light of the two major issue elements. One is that in spite of the image, that Japanese households are getting accustomed to the cashless payments gradually but steadily. In addition, you know that the Suga administration announced that the digitalization of society as a focus of its political mission. So that I think that rather I have the impression that this was the optimal time to start the substantial discussion about the CBDC in the context of Japan. And let me turn to the details about the situation of cashless payments, mostly by household sector. You know that if you look at the left-hand side two charts, that shows that the Japanese people still like to use the cash for payments or settlement. In terms of the outstanding amount of as a ratio to nominal GDP, you know that there are charts, red line charts, upward trend. But if you decompose this kind of data into two parts. One is that one is representing that the 10,000 note, and the rest of the nodes. I could still guess that there is gradual growing trend of cashless payment, because I think that the large denomination nodes, banknotes, might be used as the different purposes than the payment and settlement. You know that that includes illegal purposes. In addition, that I would like to mention that the persistent strong demands for cash is in relation to the high utilities of the banknotes or cash in general in Japan. That's it related to the several aspects. For example, that we have the numerous number of the ATMs scattered across Japan, so that in comparison with the major European states, that we have the larger number of the ATMs per capita. But that said, you know that from the point of view of the users, this is utility, but from the point of view of the suppliers, this is cost. So that it's interesting to note that the METI announced they disclosed the estimation of estimation of the estimated cost of operating cost of cash that included in the right-hand side of the chart, the slides. The large part of the cost is here, the human cost of operations of either for the purpose of the operating ATM networks or the stores, physical stores or branches of banks. In addition, you know that in light of the demographic features of Japan and the low profits or chronically low profits of banking sector, I don't think it's sustainable. Actually, in fact, as a matter of fact, the BOJ they implied this kind of possibility at the time of the announcement of their approach, that the possibility of increasing cost of operating cash, especially in rural area, due to ongoing shift of population, as well as I think that the financial assets to major cities. So that I don't think that this kind of utility of cash is sustainable at all in the near future. Let me turn to the different side of the aspects of cashless payments by household sector. In Japan, the credit cards has increased presence, probably thanks to the rapid growth of the usage for online shopping. I think that this is a common feature among the major economies. In addition, it's interesting to note after the promotion by the government to cashless payment last year, I think that even the senior people, age over 70, are getting accustomed to the practices or the utilities of cashless payment. In contrast, it's also interesting to note that the younger generation are skeptic or careful about using the cashless payment method, potentially because of the low or unstable income, or due to the very prudent the risk evaluation by the credit provider of credit or something like that. But in any case, I think that this is the important part of the issues of cashless payment in Japan. And in terms of the instruments, as I mentioned, that the credit card is the dominant measures or instruments for payment settlements for cashless payments and settlements by household. And in addition to you might note that the IC cards or e-money is prevalent, especially among the people in the metropolitan area, because of the large, the major issuers of IC cards or the e-money is provided the operator of mass transit system like the UK. In addition, that it's interesting to note that in comparison with China, I think that the payments with the QR codes have been very, very smaller than the overseas economies. It's ironic to say that the QR code was invented by the Japanese firms for the purpose of the management of inventory or something like that. But that said, you know that the one important characteristics of the QR payment is the pre-payment. So that you are required to have the sufficient amount of the bank deposit to settle the transactions by the QR codes. So I think that this is more friendly to younger generation that I mentioned. So that everybody expects that the payments with QR codes could grow very rapidly in the coming years. But you know that there are several major categories of the providers of the cashless services: banks, non-banks, operators of mass transit system, mobile phone carriers, and operators of e-commerce sites. They have, of course, a respective competitive edge, but at the same time they have relative weakness or the issues. For example, for the banks, that you know that under the tight regulation of financial authorities in terms of the range of businesses, I don't think that the banks is in a better position to make use of this cashless payment with other range of businesses to utilize the information of customers or something like that. Non-bank financial institutions also suffer from the competition from new entrants, such as the large retail store chains or something like that. For the case of mass transit system, that they tended to face the geographical boundary of the users because of this is only usable within the range of the network of their own transit system. For the case of mobile phone carriers, I think that they have more potential to broaden the business, but still that you know that the Suga administration, one of the political mission of Suga administration is to intensify or enhance the competition among the carriers, so that the potential weak profits by deregulation is the issue. And for the case of Japan, that it's interesting that the operator of e-commerce site, one potential example is the name. In light of the experiences of China, I think that they have the strong potential in relation to the cashless payment, because that they have the broad range of services as well as the e-commerce sites, and accumulation of activity data of individuals could enhance their position. So that in light of this situation, that let me go back to the BOJ's approach. Especially, it's interesting that the BOJ's approach enhanced the importance of promoting innovation, as well as the prevention of oligopoly through active competition among private players. So that I think that in a sense that after the announcement of the BOJ's approach in October, I think that we have observed some signs of the announcement effect on the size of the private sector providers. I think that one of the speakers of last session mentioned that there is one interesting private sector initiative to introduce the privately owned digital currency system or something like that. This is a good sign of the effectiveness of announcement effect by the BOJ. And another interesting aspects of competition, or new aspects of competition that could be realized by the introduction of CBDC is that the competition for intermediaries. You know that in the current system, the commercial bank has been playing a dominant role for the intermediary or funds from the household sector or farm sector to the rest of the agents of the economic society. But for the case of the framework or the system under the CBDC, it's interesting to note that the central banks, including the BOJ, suggested that the intermediaries could be done not only by banks, but also the new entrants from the non-financial services or something like that, in order to enhance the competition. So that I think that this is an important area of competition, but at the same time, in light of the request for the anti-money laundering or the authentication of users or something like that, the potential burden would be huge. So that I think that in designing the system of the financial framework by CBDC, potential incentives and the implication of financial stability should be discussed carefully. So that lastly, that I would like to make last comments. Let me go back to the design of the CBDC system that might be friendly to the existing financial system. You know that in discussing the details about the designing of the CBDC, that we have observed some the hard issues or the difficult issues for the usage of CBDC, especially for the case of the CBDC for the purpose of payments by households, or in order to replace the cash. So that because that on the left-hand side table shows that the delegate, we need to take delicate balance between the request of anonymity and the request for KYC or know your customers. Or we have observed the technical challenge to usage at the offline occasions, or the tamper resistance, or the security against the physical disruptions, or so on and so on. So that I think that we could think about the alternative approach to introduce the CBDC, beginning with the B2B, beginning with the only for the B2B transactions, because for the case of these the business purposes, you know that the customers, which is the firms, are more accustomed to disclose or share the informations in order to enhance this the utility or efficiency of transaction or something like that. In addition, you know that this is closely related to the enhancement of cross-border payments using the CBDC to enhance the sustainability or this stability of the system. So that I think that in light of the gradual but secure trend of the innovation by the private sector people in relation to the household sector, it might be the case that the BOJ might be thinking about prioritizing introducing the CBDC as the settlement, the means only for the B2B at the initial phase. So thank you very much.
Thank you very much, Inoue-san. Peter, your contribution, please.
Okay, let me share my screen.
Yeah, we can see you.
It's not, hold on, okay, sorry. Can you see the slides?
No, not yet. Oh, yes, we can see it now.
Okay, okay, good. So the title of my presentation is Digital Payment Systems in Asia. So I've deliberately expanded the scope a bit beyond Japan because as was mentioned, Japan is not necessarily the most advanced country in Asia in this area. And so I think it might be useful to see some of the experiences elsewhere as a possible a guide to what may take place in Japan somewhat later. Certainly, as Inoue-san mentioned, China in particular has seen very rapid advance of digital payments and also activity in areas such as CBDC. So I'll talk a little bit about the scope of digital payment systems, examples of innovation, how wider adoption of digital payments can support the development of new business models, implications of COVID-19, the challenge of alternative currencies, including both crypto assets and CBDC, and then some conclusions. So this first chart just shows the growth of digital payments in Asia, and you can see that it's generally been quite rapid, particularly in the mobile POS payments, which are for example, as Inoue mentioned, using QR codes or that sort of thing. Digital commerce or e-commerce had been larger in volume terms, but now the two segments are becoming roughly equal. And this shows the penetration rate of digital users in Asia. And you can see again that there's been a rapid increase for digital commerce. The share is about 64% of the adult population, whereas for mobile POS payments, it's moving up to over 20%. And in terms of the share of mobile transactions, that is transactions using mobile phones, you can see that Japan ranks fourth after China, South Korea, and India. And of course, China is is way ahead of the pack there. And this shows the penetration of use of digital payments in China. And essentially, although there are actually quite a few digital payment companies, roughly, I think around over 200, there are basically two which dominate the market, Alipay and WeChat. And they both essentially have access to almost all adult customers in China. So that has, I think, led to the development of a kind of an oligopolistic system, which is something that also Inoue-san mentioned and is a possible concern going forward. And what's particularly the case of both these systems is they've evolved a whole ecosystem which goes well beyond just digital payments and transfers. It's very much linked into the e-commerce system. Also, they use the data to allow persons to apply for loans or make investments, that kind of thing. So they have prospered to a certain extent by performing many bank-like operations, even though they're not regulated as banks. So I think this is also a significant potential regulatory issue. And certainly if e-commerce type companies, let's say, start to take the lead in Japan in the area of digital payments, that could lead to those kinds of regulatory concerns also. Now, a few examples of innovation. So Hong Kong, they have what's called the faster payment system, which was launched in 2018. So it's a 24/7 real-time cross-bank SVF funds transfer or payment services, real-time clearing and settlement platform. Supports the use of mobile phone numbers or email addresses for payments in either Hong Kong dollars or Renminbi. And as of 2018, had almost over 1.8 million registrations and 3 million transactions. Another example of innovation is in Thailand, where they adopted a standardized QR code for all the various payment companies. So for individuals, this fits to the new lifestyle for those who have mobile phones with them. And it provides secure, cost-efficient, and convenient e-payment transactions. And for firms, they're able to receive both domestic and international payments, able to accept funds from various payment instruments, including bank account, credit card, debit card, and e-wallet with one QR code. And it eases operational burdens and reduces business costs. Also, wider adoption of digital payments can support the development of new business models. So increased transparency of transaction information allows new uses of such information, such as for credit scoring. Digital payment systems can efficiently transact small amounts, allowing more transactions to be brought into the formal financial system. And availability of digital payments encourages the development of e-commerce, including that by micro, small, and medium-sized enterprises or MSMEs, and facilitates participation in digital platforms. And COVID-19 has had a significant impact on adoption of digital payments. Obviously, it discourages the use of cash and hand-to-hand transactions. It very much encourages digital transactions. And also, interestingly, the increased use of cash transfers in response to COVID-19 can provide the basis for increasing financial inclusion and social safety nets longer term. So there are examples in both Pakistan and Brazil of creating what they call limited mandate accounts, so that benefits could be transferred to users, and then these are expected to evolve into a more full service type accounts. However, there is concern that shift to digital transactions could worsen the digital divide due to differential access to internet, mobile phones, et cetera. And this does point to the need for differential policies to encourage digital inclusion by disadvantaged groups. Now, in terms of the challenge of alternative currencies, private crypto assets such as Bitcoin operate entirely outside the normal payment system, but there are still quite a few obstacles. Obviously, price volatility and significant transaction costs are probably the key ones here. On the other hand, central bank digital currencies or CBDCs could compete directly with bank deposits, but I think central banks are still somewhat hesitant to move beyond the wholesale or interbank CBDCs for fear of disrupting financial stability. However, I think China is, again, one of the key examples of CBDC implementation. They have what's called the Digital Currency Electronic Payment, or DCEP, since 2014. It uses a centralized system, not a blockchain, and they've been conducting tests in various regions. Interesting, as Inoue-san mentioned, this is a two-tier system with intermediaries, so the central bank does not directly interact with the public, and this helps to avoid competition with existing financial institutions, which otherwise could lead to financial disintermediation. It's token-based and therefore does not require a link to a bank account, and this would make it accessible to foreigners as well as Chinese residents. Also, the National Bank of Cambodia launched a blockchain-powered payment system called Project Bakong, in recently becoming the first central bank in Asia to go live with such a system. So this peer-to-peer payment system actually runs on top of the Hyperledger Iroha blockchain, which is was designed by Japanese technology company Soramitsu. Unlike many CBDC prototypes, it does not involve the exchange of central bank-based backed tokens, but it's based on fiat currencies and supports transactions in both Cambodian rial and US dollars, and it connects all financial institutions and payment service providers under a single payment platform. Some other examples, and particularly dealing with this issue of foreign exchange transactions, we have the Thailand-Hong Kong project of Intanon Lion Rock. Japan has been doing the Project Stella with the European Central Bank, and Singapore and Canada also looking at depository receipts backed by tokens. In conclusion, digital transactions are growing rapidly in Asia, although rates of penetration do vary widely due to different conditions. Payment systems innovations can improve the efficiency of the banking system, as well as providing advantages to consumers. Diffusion of digital payments can support new business models, especially in e-commerce. COVID-19 could accelerate adoption of digital payments, but has the risk of widening the digital divide. Crypto assets are a potential game changer, but not yet, whereas we think CBDC has much more near-term potential. So let me stop there. Thanks very much.
Okay, thank you, Peter, for a very interesting regional perspective. Okay, Gavin, over to you. Gavin is a banking lawyer, but he's also someone who has considerable expertise in the field of fintech, and I think that'll be very useful in the context of giving us some background. So, Gavin, please.
Well, thank you very much, Anthony, and thank you for having me here today. Listen, I think my esteemed colleagues who have spoken before me, both today and a couple of weeks ago in the first session on digital currencies, have highlighted a number of very complex issues. You know, this is not an easy area to understand. So what I'm going to try and do today is try and break down some of that complexity a little bit, and use some examples, some real life examples of what we're seeing here in Japan, to make it a little bit more real. And then also I want to look a little bit about what's going to happen next. What's the forward sort of piece to this? So I'm not sure whether, are my slides available? Do we have those set up? If we don't, that's fine. I don't need them. I did send them in, but we don't need them. That's fine. I can share them later on if that's helpful. But there's
slide. Slide or something. Okay.
That's okay. I can sort of continue on.
Okay, continue, yes, and then we'll show them later.
So there's four main sort of topics that I wanted to sort of quickly run over today, and one was just to simplify a little bit of the broader discussion around the evolution or revolution of digital money and what that means. Then I wanted to touch on a theme which a couple of speakers have already talked about broadly, and that's really the difference between looking at digital, particularly cryptocurrencies, as an asset class by themselves versus a method of payment or a method of exchange, so a store of value. Then I wanted just to quickly talk a little bit about the impact of COVID, and Peter touched on it briefly there, but how that's really driving some transformation in the broader market. It's changing business models, which is really accelerating some of the investment and other things that are going into digital payments and digital money. And then finally, I'll wrap up with just some observations about what the short and possibly a little bit further long-term future might hold for us in this space. So just to firstly look at, if you go to the next slide, please. Thank you. So just to firstly look at the evolution or revolution of digital money. Now, I think many of the themes that we've talked today are not independent of each other, and that's what makes them complex. They overlap quite a lot. But if we can try and put them into a couple of baskets, it might be a little bit easier to understand. So digital money is not just a discussion about cryptocurrencies. You know, Bitcoin does dominate a lot of discussion at the moment, but Bitcoin is only one aspect of the broader digital sort of money landscape. And it's not just dominated by blockchain or decentralized technology. You know, as Peter just mentioned in his presentation, even some of the CBDC models that have been rolled out globally are not based on blockchain technology. Again, blockchain is one of the topical areas which comes up a lot in discussions around digital money, but it's by no means the only thing that we're talking about. So a couple of other areas to think about, and if you're trying to create a bucket or a couple of buckets to categorize some of these areas. One of them is definitely cryptocurrencies, like Bitcoin and blockchain, the technology behind that and how that works. Another area which is getting a lot of attention recently is digital infrastructure. So the actual infrastructure which facilitates digital payments. And a third area would be digital instruments, which is where a lot of the regulation is actually focused on, because that's really what is the touch point with retail consumers. So the infrastructure is sort of the behind the scenes innovation and technology that's being used to drive this evolution or revolution about digital money. And so if you think about it in those terms, it's a lot easier to understand that digital money and the move towards digital money, or the digitalization of our financial services, is not a new thing. You know, we've had ATMs for decades. ATMs were effectively the first form of digitalization of financial services. You didn't have to go into the branch anymore to get money. Okay, how many people have a Pasmo card or a Suica card? And again, another form of digitalized financial services. So an instrument that we all use as retail consumers. And we don't think of it in the same context as blockchain or Bitcoin or anything like that. We just see that as part of our everyday life. We're all used to it these days. But these are just examples of how the discussion about digital money is not a new one. And it's not something that's just starting now. It is a continually evolving journey based on innovation. And what we're seeing now with Bitcoin, with blockchain, and with some of the other developments that are dominating discussion these days, is that there's new technologies which are driving new approaches to things. And a big part of that does look at the risk allocation. And particularly if you're looking at it from the government or the central bank's perspective, consumer protection, stability of the financial markets, and the predictability of the financial markets. So one of the big things that is coming up in conversations between central banks around the world about CBDCs and the central bank digital currencies is how could they impact effectively the balance of payments and the economic basis on which governments set their budgets and things like that on a forward-looking scale. The interrelation with fiat currency and how that flows through the economy. Are these similar things which we should compare like apples to apples when you're looking at it from an economic theory perspective? Or is it a different idea, a different concept that we need to understand what that means? So these are the reasons why there's very detailed discussions taking place in relation to whether a CBDC is appropriate. Every government has different sensitivities that apply to that broader discussion. And that's why we're seeing different governments act at different paces. The US government, for example, and we all know the US dollar is the leading form of leading currency of settlement globally. The US government has said for the time being, they're not interested in launching a US dollar-based digital currency. They haven't ruled it out. They've just said for the time being. At the moment, that's not the priority for them. But we're seeing other countries, as Peter has sort of highlighted a few as well, that are and have already launched things. The other interesting, I suppose, dynamic which plays into that is the cultural one. This is not just a technology discussion or a financial markets risk discussion or an economic discussion. It's a cultural one. We're seeing with innovation more broadly, one of the reasons why many of the Chinese companies in our region are or seem to be ahead of where we are here in Japan is because culturally, they are much quicker to move. They'll take the risk. So they will run first and wait for someone to tap them on the back and say, hey, you've got to slow down. Whereas I think in Japan, the culture is more like, well, let's get everything prepared first before we take that first step. And so there's just that cultural difference as well, which is playing into how this is developing out. And that plays in at all levels, on the government level, the private sector business level, and also at the consumer level. So the pickup of digital payments by consumers in Japan is not as quick as it has been in China. And part of that is culturally driven. So next, just to quickly look at the idea of asset classes versus medium of exchange. This was touched on quite a bit in the last discussion around this 2 weeks ago. And the idea about, for example, Bitcoin being also an asset that people invest in. It's speculative. It has a market-based price, which is going up and up and up recently, but it has had periods where it's gone down very quickly as well. So the idea of using it as a speculative investment asset and an asset class by itself has developed quite strongly. It's market-driven, and from that perspective, people have seen and continue to see the opportunity around it. But that's different from it being used as a method for settlement. It's not a fiat currency. I think that's important to remember. It has, even in Japan, quite a few years ago, we did see some shops say they would accept Bitcoin as payment for things. That's no longer happening. Partly because the cost of processing Bitcoin transactions skyrocketed with the value of Bitcoin transactions, because the underlying methodology and the incentives to create the participation that's required for the system to work was based on a percentage of a Bitcoin. So when Bitcoin went from, a few dollars to now what, $60,000 per one Bitcoin, that meant the cost of operation also went through the roof. So we're seeing many, many places around the world say, hey, it just doesn't make sense anymore to use Bitcoin as a payment method, as a method of exchange. That's why we're not seeing it as much anymore. But there are other cryptocurrencies that are coming onto the market where they are being viewed as methods of exchange. That's on a private sector basis. So you will, and we are already starting to see in other jurisdictions, companies like PayPal not only accepting payments in fiat currencies, but in some countries where under the local regulation they're allowed to, they've also started to accept payments in cryptocurrencies. Not all, only predefined cryptocurrencies, but they have developed the technology to facilitate and the infrastructure required to facilitate those type of transactions. Will that come to Japan? My guess is yes. I think it's only a matter of time, because Japan is one of the biggest cryptocurrency markets globally. Part of that is because of Japanese investors have looked at and engaged with cryptocurrencies from a very early on. And part of it is due to the robust regulatory framework that the FSA, the Financial Services Agency, has developed. Now, I'm sure many of you will have heard about Mt. Gox and CoinCheck and some of the big incidents, which sort of were a little bit embarrassing for the Japanese regulators at the time, because they were basically highlighted some gaps in the Japanese regulatory framework. But now they've actually used that to strengthen and close those gaps. And so now the Japanese framework is viewed globally as one of the leading, most robust frameworks for cryptocurrency industries. The way we regulate here, the exchanges as well. So there are different parts to the market. There are different ways of viewing digital assets, cryptocurrencies, methods of payment, things like that. What I wanted to spend the last couple of minutes on was looking really at digital transformation as an accelerator. Can we just go to the next slide, please? Just to set the scene, Baker McKenzie, my firm, we recently did a survey of about 800 different clients that we work with across the Asia Pacific region to help understand what their main concerns are with, what the impact of COVID has been on their business and how to move forward. And the way we're working with our clients and the way we're thinking about it is the different phases of COVID pandemic. So there's the resilience phase, which was that first, how do we respond to this? The recovery phase, how do we start to wake up again? And then the renewal phase, what does living with COVID mean? So this survey that we did is part of the renewal phase, looking forward. So if we just go to the next phase, next slide, please. So we surveyed 800 C-suite sort of clients that we work with around the globe from all different industries, a very balanced approach across 6 main sort of industries and across jurisdictions throughout Asia, including Japan. So 100 of the 800 were actually from Japanese companies. If we can go to the next slide, I just wanted to highlight a couple of very relevant trends which will come out of this. So if you have a look at this slide, it sort of identifies the top 3 risks that our clients who responded to this survey identified. And we broke it down by industry. And the thing that was interesting for me is for the financial institutions industry and for the TMT, or technology, media, and telecoms industry, the very top risk that everyone has identified is competitive disruption via technology. And for the financial institution industry, to have identified this really means or includes digital money in its broadest sense. So digital payments, cryptocurrencies, digital infrastructure, digital instruments. It also impacts things at a B2B basis and at a B2C basis. So it's basically for your banks, it's both their back office and their front office that are very closely being impacted by these changes as well. So we can just go to the next slide, please. This was, I apologize for the very small print here, but what this basically highlighted was that over 90% of our respondents across all industries felt that digitalization has actually had an impact on their business due to COVID. And included in that, with more than 30% said it's actually forced them to transform their whole business and digitalize their business. So this is a trend, this is a risk that it goes far beyond the financial industry by itself, or our banks and the infrastructure that they bring. It's impacting every industry, and our banks support every industry. So where they're working with companies as opposed to the retail bankers, retail customers, you know, they do have the same type of issues that are coming up. So if we can go to the next slide, please. This is just a very quick wrap up on the way we see some of the things moving forward. We've developed what we call the SMART framework, which looks at the whole cycle of digital innovation and how it disrupts things. I won't go into detail there because I think we've got a bit of time. We don't have much time left, but I did want to just highlight that digital transformation and the way that's impacting our businesses is driving changes in their needs from their financial services partners. So the services that banks need to provide, it's not just the banks who are deciding or the governments who are deciding how those innovate, how those change, how those move forward. Companies in every industry, as their business models are changing, as they're responding to COVID, and they're moving their operations, for example, to the cloud and what that means, or they're trying to understand their data more and the opportunity that that presents. That's what's driving a lot of the innovation around digital money, because that's what's changing, the changing needs of the customers, both on a retail base and on a business base. So I think when we think about broadly the revolution of digital money, what it is, how it's come about, and how it will move forward, we need to think about it in the context of that broader discussion. It's the way our businesses outside of finance, how they're changing, how they're evolving through digital transformation otherwise. That is changing and driving a lot of the innovation within financial services around digital money, in other words. Okay, then just finally to wrap up with a couple of, I suppose, forward-looking observations. I mean, I don't have a glass ball or anything that would allow me to predict the future, but there are a few trends which have developed, and I think there's we can make some pretty clear observations about where they might go. The number, I suppose, it's linked to financial inclusion, and Peter was mentioning digital inclusion, which is becoming much more of a relevant issue. And that's the continuing overlap that we're starting to see develop between digitalization and digital money and sustainability, and the government's focus on driving the sustainable development goals that have been issued by the United Nations. So for example, digital money being used to increase financial inclusion by giving more people access to services that they might not otherwise have. And a lot of this is being seen by, for example, people having access to a mobile phone, but not being able to get to a bank. And COVID has really highlighted that because many of us have been told to stay at home and not to go to banks. So if you're in a small rural town in Niigata, for example, and you're told not to go to the bank, but you still have to have access to things to continue to pay utility bills or do whatever. It's forced people to do that. So that continuing trend and the overlap between digitalization and sustainability, I think, will continue to grow. It will drive financial inclusion. It will drive digital inclusion. The other thing is, I think, coming back to one of my initial observations about cultural impact. As we get more comfortable with and used to the new services that are being provided, they will accelerate. We're already seeing generational differences here. Our kids, my daughter, she's digital native. She doesn't know the world without an iPhone, for example. So everything for her digitally comes very natural. For some of us who have longer memories, then, we have sometimes some more challenges to accept and to transition across to some of these new services. But as we get more comfortable with them, that will continue to happen, and that will accelerate as well. And then just the final observation is that digital money and digital infrastructure that this is creating will actually drive greater innovation across other markets as well. So there will be new products, new opportunities, new business models that only come about because of the innovation around digital money. Thank you.
Okay. Thank you very much. That's very clear and interesting presentation. All right, we'll turn to questions. Actually, I would like to ask one brief question myself to begin with. It's a simple question, or maybe a simplistic question, but someone has to ask the simple questions. Central bank digital currencies, will they be represented by some form of token, which you could, for example, I can tender this 10,000 yen note, I can tender a credit card, but with digital currencies, do you rely on a wallet to present, to actually make payments, or is there some physical form that CBDCs will take? You first, maybe, then we'll turn to.
Certainly, thank you, Anthony. It's a great question, and the whole idea of a digital sort of central bank currency or digital currency is that it's not represented physically by a note. So I'm not sure whether many of you have sort of are using or have heard about e-wallets. So it's basically, it's the digital representation of your wallet. So instead of actually carrying a wallet with notes in your phone, you'll have an e-wallet which effectively has a token in it. So it's a digital representation of that. But digital currencies can be formed in many different ways. That's one common way of doing it. But the idea of them being represented by a token would still mean that they're digital. They don't really have the physical form.
Okay. Sam, do you want a quick comment on that?
Okay. Yes, from the technical point of view, I think that, as I mentioned, that if you have the CBDC for replacing the function of cash, you need to have the kind of wallet in order to satisfy your needs to P2B payment or something like that. But that said, as I mentioned again, that it causes the substantial technical challenges in relation to the development of the digital wallet against the security issues, or offline security, or offline payments, or keep anonymity or something like that.
Okay. Peter, quick comment or not?
Yes, I think it's token is one option. I think the other main option is to have an actual account, like a regular bank account, only would be CBDC. and both have their advantages and disadvantages which relate to the issues of transparency versus anonymity.
Okay. All right. Questions from the floor? Yes, Watterson. As usual, identify yourself, please.
My name is Yusuke Wada. I'm an associate member. Thank you very much for your speech. Speaking about Bitcoins, I remember when it was started off with $3 or $4. So if I would have bought them, I would have been a billionaire by now, but I probably lost it around Mt. Gox case back then. My question is oligopoly that you all spoke about. China has only two, well, major two, Alipay and WeChat, but in Japan, there are so many. And the biggest problem is we had just a couple of days ago was the JRE's updating Suica system, and people could not make any transaction. And my question is about the mutual entry. There's no backup system because LimePay will be able to back up by PayPay, I believe. But still, there is no there's no infrastructure that's backing up each system, and there's no democracy there. Well, there is a democracy, but what is your expert's opinion about this? About which is better for the market? Having an oligopoly or this chaos system like in Japan? Thank you.
What are some of your questions addressed to?
To anyone. If anyone can answer that.
All right. Gavin, please start.
Thanks. I think it's a great question, and it does highlight the risks. You know, the challenge with the Chinese approach is that if there is a problem with one of the systems, it impacts so many people, and it impacts such a big part of the market. And those challenges can come from anywhere because it's an entity that's really dominating things, not just a service. So we've seen, for example, some of the recent press around Alipay or Alibaba more broadly and their founder, Jack Ma, and how that's impacted their stock price and things like that. How that's flowing through to impact the services as well can also impact there. So I think competition is always a good thing. I think there's also, in order to not be too fragmented though, there has to be some clear rules that are based on customer protection. And that's really what is flowing through. So we are seeing some countries where that public-private partnership, so the government setting the baseline, the basic framework, and then the private entities coming on top of that to ensure that level of stability is one model which is we're seeing working in other jurisdictions. And we're seeing it in some ways in Japan as well. And I think the start of any new market, you will have fragmentation, then some consolidation, which will bring it back. But I hope Japan doesn't go as far as China, and I hope we don't go to just a two-top pony type of system.
Thank you very much. I think that this is an important point that you know that in principle that the competition is very important, but this will be discussing in the context of the position of the economy or financial system. For the case of Japan, that we are unfortunately in a catching up process of one system and China or the other European states or something like that. So that in order to accelerate the pace of innovation, I think that some kind of leadership or the standardization of the technology should be prioritized.
Okay, Peter, quick comment?
Yeah, well, I think these are complex software, hardware systems. And so regardless of whether it's an oligopoly or a competitive system, you are going to have glitches once in a while. I think that's probably unavoidable. So I guess there's also a regulatory issue. To what extent do the regulators want to try to enforce some kind of reliability of the payment systems on the payment providers?
Kurt.
My name is Kurt Sieber. I'm an associate member. I mentioned quite a number of things at the last meeting we had, and I will not go back into that, but my own personal impression of what I personally, went through in different things. Yesterday, I got the $25 million offer from the United States if I do this and this and that. It is, to a large extent, it is a, again, one should say digital money and digitalization are two totally separate things. And I'm fully in favor of digitalization. But the question is, how much now of the world economy is in percentages? I remember, but that's already about a few years ago, that it was about 0.3% of the total world economy. How has this developed, in number of percentages during the last few years? Thank you.
I don't really.
Sorry, perhaps I missed your point. What is the percentage of the world economy?
The percentage of the world economy,
which the digital,
which is handled by Bitcoin, by cryptocurrency.
Percentage of the world economy handled by Bitcoin or
yeah, I mean, there was a figure on that. I think it must be about 3 years ago or so, where it was announced, or well, announced, yes, 0.3%.
That's a little bit apples and pears.
Now that probably has increased from whatever I hear, but how is the real actual result of the last 3 years?
Yeah, I'm not sure what the actual figure is now, but the trading value of Bitcoin has increased, sort of obviously a lot, and there are many more cryptocurrencies now than there used to be. So the overall impact, I think, has definitely increased. The use of cryptocurrencies as either an asset class themselves for investment or as a payment exchange, method of payment exchange, is evolving. Sometimes we've gone forward and sometimes we've gone back. So I think how much they've penetrated the market and how much we're using them is not quite the same discussion about the value that's just represented by the price of Bitcoin, for example, and where it is now. But the reality is that they're much more visible now. There are a lot more people that are playing in. And the big difference compared to 3 years ago that I'm seeing is institutional money. So institutional asset managers, institutional fund managers, custodians, and things like that are now starting to hold and invest in cryptocurrencies. And they weren't 3 years ago. So it's a big change.
Can I make some quick comments or not? Yeah.
No.
Okay. Peter, do you wish to add anything on
it? No, I have nothing to add to that. That's fine.
All right. No questions online. No. Any more questions from the floor? If not, I have one more simple question. Obviously, a digital yen is worth the same as a physical yen. Those two can't diverge, I imagine. CBDCs, you say, are legal tender. Legal tender, fiat money, whatever. That doesn't imply that Bitcoins and so on are illegal tender, presumably. So how do the two systems coexist? And it seems a rather odd situation where you have legal tender on the one hand and this private money on the other hand. So isn't that going to lead to considerable confusion in the future? Peter, you first.
Well, I think, as was mentioned, at this point, there's very little use of cryptocurrencies for actual transactions for goods and services. So it's almost, as far as I can see, it's almost entirely being used as an asset and a relatively speculative asset at that. So I don't really think there's much confusion at this point. I mean, the basic constraint, or I think one of the key problems in using crypto assets like Bitcoin for transactions is their unstable value. Now, there is another class of crypto assets called the so-called stable coins, which are linked to a fiat currency in some way. So that, and for example, the Facebook project of Libra, which I believe is now called Diem, was intended to provide that kind of service. And that, I think, was perceived as more of a potential threat to fiat currencies. So if that gets off the ground, there could be potential competition there. I think that is an issue going forward.
Okay, thank you.
Yes, please. Yeah, this is a very interesting question. That you know that under the current system, even under the current system, we have the legal tender as banknotes for the current account balance of the at the central bank held by the private sector bank. But still, that if you pay back, for example, your borrowings with the bank deposit, it will be accepted and completed and legally effective. So that you have still options to use legal tender or the other range of financial assets to settle the transactions or something like that. So that under the frame, even under the framework after the introduction of CBDC, still I think that the private sector agents have some options to deal with the settle with the CBDC or the other range of financial assets if mutually agreed.
Okay, Gavin?
I think just to quickly wrap up on that, the only thing I'd add is that private cryptocurrencies are sort of like a bartering system. So instead of saying, I'll give you 3 goats for your 2 sheep, they'll say, I'll give you 3 Bitcoins for your 2 sheep. But if you think about that, it's a little bit easier to maybe visualize the difference between that and the fiat currency.
Okay, all right. The first cryptocurrency in the world was what again? Who introduced the first cryptocurrency?
Bitcoin is the first one that has gained popularity based on the decentralized model, decentralized ledger model, and the blockchain.
Okay.
So there are a number of other competing blockchain-based systems now which do host new cryptocurrencies. Ethereum is one of the other underlying blockchain technologies which hosts many different cryptocurrencies, and Hyperledger, which was quoted before, which is being used for the Cambodian internal sort of CBDC, and has been the backbone to Project Ubin, which is the Singapore government, Canadian government sort of looking at how digital ledger technology can be used to facilitate things. So there's a number of different ones that are out there now, but it really started with, and many of the discussions started around Bitcoin.
Okay. All right. Well, unfortunately, we're just about out of time. Again, we've only been able to really look at a part of this huge spectrum, I think, and I think that's a good reason for us to come back to it again at some time in the future and have another session. But in the meantime, thank you very much, Inoue-san, Peter Morgan, Gavin, for your very clear and concise presentations. And that is next week, I would just remind everyone, no, sorry, in 2 weeks' time, we're looking at Tokyo as a financial center, which is a very hot topic. So I hope you'll all be here. It'll start at 9:30 instead of 8:30. With any luck, we'll have coffee and maybe even croissant or donuts to serve. So thank you all very much. And the meeting is over. Thank you.
Okay. Thank you.